Hi, this is Matt Ahrens with Integrity Advisory. The world feels very different today than it did just a couple months ago or a few weeks ago even. As we're starting to kind of look at this pandemic as hopefully something that we're coming through, we certainly recognize that a lot of people, and potentially yourself and your families, were impacted financially by the coronavirus and the COVID-19. One of the things that I want to talk to you about today is three things that you could be doing today to help out your financial situation. The first one's really important. It's emergency savings. We talk all the time about the importance of having an emergency savings account. What we don't really talk about is what kind of interest rate are you getting inside of that account. I'm just as guilty as everyone else in that I work with a large national bank, and that large national bank, even though I have a savings account there, they pay me practically nothing to have that money in that account. So one of the things that I have done and that we do with a lot of our clients is we have you go online to bankrate.com and see what else you can get from like an Ally or a Barclays or a Goldman Sachs with an online savings account. So let's take a quick look.
All right, so let's check out bankrate.com. When we go online to the website, the first thing you're going to want to do is go up to banking and money market accounts. And inside the money market accounts, I do want to point out that they sometimes will show just this featured tab. Right now there's nothing on the featured tab. So you always want to make sure you look at all products. Some banks will pay to be featured and they'll only show you one or two banks, but we automatically went into all products here. And then as you can see, these are the rates that you can currently get inside a money market account. I typically like to look at banks that I'm familiar with. Nothing against UFB Direct, whoever that is, but it is still FDIC insured, so you still have federal insurance on the deposit up to a certain limit. But I'm always a little bit more comfortable with a bank that I would recognize, like Citi or let's see, like PNC Bank, some of those. But Citi's offering 1.35% right now on money market account. So looking at this list, that's probably the route I would go. Every now and then you'll have one of these banks that you may not recognize, where they're just running a special to get people in that money market account, and then after a certain number of people get into that account or a certain amount of assets get into those accounts, they drop the rate. That's less likely with a company like Citi. So I would take a look at something like Citi, and again, they're paying 1.35%. which is probably pretty substantially different from what you may be getting at your bank and your savings account, where most of those accounts are paying well under 0.5%. I know that the bank that I'm at, it's significantly less than that. It's probably less than 0.1% is what I'm getting. So you start thinking about adding an extra 1% per year, and it really starts to add up over time.
All right, now that we've taken a look at emergency savings and how you can squeeze a little bit more out of those savings accounts, let's think about any debt that's currently outstanding. Now's a great time. As interest rates have gone low, the Federal Reserve has indicated they're going to keep rates low for an extended period of time. It's a great time to take a look at car loans, mortgages, student loans, and see if you should refinance those. I myself am going through a process right now where I'm refinancing my mortgage, going from a 30-year down to a 15-year. So what I wanted to do is share with you a little bit about what that looks like from a numbers perspective. So I'm going to go ahead and share what my numbers look like and show you how much savings you can have from an interest perspective and what it might be able to do for you. So let's take another look.
All right, so here's the cost analysis for my mortgage that we're currently looking at refinancing. When I originally purchased my home, I was at a 30-year 4% interest rate. Current rates, again, this is around June 16th, 2020. 30-year was looking at 3.125%. 15-year looking at 2.625%. Realistically, I understand that these things float often, and so you may not necessarily see the same rates, or you might see better rates. But just looking at my current analysis, I can save quite a bit of money in interest by switching to a 15-year or even just refinancing under 30-year. I've been in my home for 5 years, so I didn't really want to have a new mortgage that extended out an extra 5 years. But even if I did do that, you can see over here the amount of savings that I would have on a 30-year fixed with a lower interest rate. Over the next 96 months, I'd save almost $10,000. On going to the 15-year, that savings is about $21,000. In interest in the total 15 years from where I'm at today versus what I would pay on a 15-year, that difference is almost $50,000. So right now, over the next 15 years in my current setup, I'm paying a little over $90,000 in interest. If I switch to the 30-year fixed with a lower rate, then I'm saving roughly $24,000. And then take a look at the 15-year, like I said, about $50,000. So there's really a compelling story here, and taking a look at whatever loan you have. This is just a mortgage, but I'm also looking to refinance my car loan currently, and then we've done a lot of help with folks who have college loans out there, because those rates are really low as well. That gets a little bit tricky, so if you are looking at doing some of that, feel free to give us a phone call. The only reason I say that you want to be careful in the college loans is that if you have a federal loan right now, the government's is not having you make payments towards your interest. And so if you're still doing payments right now on a federal loan, you're just reducing your principal. So you do definitely want to understand the benefits and the risks of refinancing a college loan. But if you have any questions, feel free to give us a shout on that. We'd be happy to help you out.
All right, so that's just taking a look at mortgage rates. But as I mentioned before, certainly student loans are a big one that are out there today. And I do want to throw in one additional important information here when it comes to student loans. There was a recent law change that if you have student loans, you can use money from a 529 account to pay down those student loans. And by making a contribution to a 529 account, that money does not count towards your state income. So even if you're making payments on a student loan, one thing that I would highly suggest doing, and feel free to contact us if you have any questions about this, you can make a contribution to a 529 account, take the money right out of the 529 account, and make a payment directly to your student loan payment. All you're doing is washing that money through the 529 account. You're going to make the payment anyway. You could even do something that I've done in the past, and that is make my payments for the year. At the end of the year, take whatever I put into that student loan as total payments for the year, put that exact amount into 529. You let it sit there for a couple weeks, and immediately pull it back out to reimburse yourself. Again, all you're doing is just washing that money through your 529, and it comes directly off of your state tax income. So now let's take a look at the last thing, and that is utilizing tax-free investment accounts. Very familiar with Roth accounts, whether it's a Roth IRA or a Roth 401k. One of the nice things about these accounts is, let's think about what we've done recently as a country. The government just spent an awful lot of money, and it's continued to spend a lot of money on stimulus to kind of help us get out of the shadows of this pandemic and keep the economy churning. Everybody knows that eventually that's going to lead to higher taxes. So if you're in a position today where you can make Roth contributions, it'll be even more impactful today than down the road when taxes would be higher. So think about this: if you're paying 15% taxes today, but down the road maybe you're going to be paying 25% or 20% in taxes. Down the road, it might be more impactful to make contributions to a pre-tax account like a traditional 401k or a traditional IRA. So while tax rates are still low, think about making those contributions to a Roth 401k or a Roth IRA. Again, just as a little bit of background information to remind you, when you make contributions to a Roth, whether it's an IRA or 401k, that money comes out after taxes. So you've already paid taxes. If you take $100 out of your paycheck to put in a Roth 401k, then your take-home pay is reduced by $100. There's no tax savings there. That money goes in, but it grows tax-free. So if you've got 10, 20 years until you're going to need to access that money, add the power of compounding, and your future self will really appreciate the fact that you took advantage of that. Even if you're in a situation where maybe yourself or you and your spouse make too much money to put money into a Roth IRA, one, you can still put money in a Roth 401k because there's no income limit on that. But two, there's something known as a backdoor Roth that would still allow you to make those contributions. If you have any questions, please feel free to reach out and ask us. That's what we're here for. We want to be as valuable to you as we possibly can. So those are 3 things that you can do today to help yourself financially and set yourself up for a better financial future. If you have any questions, please feel free to reach out. Thank you.